Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Last week we have prepared the research also on the Great British Pound, but within the last week we haven't taken a look at it. So we mostly have discussed different currencies, mostly euro currency. But on the Great British Pound, some really important moment has happened that could clarify further direction in medium-term perspective. I just briefly remind you what we have talked on the previous video, weekly research. So the major concern that we had is how deep the upward retracement will be. So we don't have any doubts that this is just a retracement yet, since we have long-term bearish view on the Great British Pound, and we think that it will continue dropping in a long-term perspective. But in the short-term perspective, we have seen this really fast action 2 weeks ago, and major concern and major question was how far market could move. And the pattern that could be formed here that could clarify this direction and the depth of this retracement was this potential head and shoulders pattern. It's a really easy recognizable pattern here, but last week we also have estimated that this pattern has a special trick. Let's call it as a trap or some other way, how you like it more, but it's not really easy with this pattern. And the trick stands with this upward action. So in fact, the problem that you could see stands on the 4-hour time frame chart. The point is that 2 weeks ago on Monday, market was above the 618 target of this ABCD pattern. The CD leg of this pattern was really fast. And normally, when the market forms ABCD patterns to the upside, now we're speaking on the right slope of the head, so this ABCD pattern. Normally, when the market forms the ABCD and exceeds the 618 target, it continues action to the 1618. It's approximately 144, 144.50 area, this area. But as market has moved above the 618 already on Monday, in particular speaking on Friday, this has happened. That already has happened in our weekly research. We said, well, it seems that the major barrier for upward action stands on the daily chart. Particularly speaking, this is daily overbought and weekly pivot resistance, monthly pivot resistance one. But as soon as market will retrace down slightly and left the condition of the overbought, it should continue to move higher to complete this head and shoulders and to reach the neckline to keep the harmony of this pattern. But this hasn't happened. So you could see that minor retracement that we have counted on has happened, but then suddenly market has dropped significantly. CFTC data shows on the changing situation and the sentiment. And since market wasn't able to continue this ABCD pattern right to the neckline, and in general has broken the major logic of moving with the ABCD, so it just somehow stops between the targets. This is very rare, could happen on the market. It's very rare. So market usually turns either on the completion of the 618 and it wasn't able to move higher and it's just dropping, or it completes the ABCD and then turn to the downside. But when the market has exceeded, especially on such strong pace to the upside, the 618 and suddenly stopped, something has stopped it and it drawn down. This has happened before the Belgium tragedy. So this is something wrong with it. So this is not normal action. That's why, guys, last week we said if you see this drop, be ready for the failure of the hand shoulders pattern on the daily chart. This will be not normal for the hand shoulders. At the same time, you could ask that maybe this head and shoulders is a bit skewed pattern, so maybe we could bring the neckline in this manner. So maybe, in fact, the neckline has been reached. Market just has turned down, and now it has formed this head and shoulders pattern, because take a look, the market right now stands at the bottom of the left shoulder. So keeping the harmony, keeping the visual harmony of this pattern. What if market will start move up right from this area? Well, theoretically, this is possible, of course, because there is no 100% probability of any event of the market. That's why we probably need to take position at such level, I mean the short position, that will give us the major protection. We have to take the position in the safest place to get some protection and to be able to left this position if something will go wrong. Another reason, guys, why I think that this could be really the downward start and this continuation of the long-term bear trend is that, guys, market wasn't able to pass through the monthly pivot resistance. So we know that the pivot resistance holds retracement on a bear trend. If this retracement up with this head and shoulder should continue higher, I do not see any real barriers why market wasn't able to complete this ABCD pattern. It seems really curious. But still, let's assume that, yes, we could be wrong, and maybe market will start the head and shoulders right from this point. How we should behave, what strategy we could apply here to protect ourselves. First of all, take a look on the follow time frame chart. Here, guys, you could see this thrust down, and we have the bullish, some kind of the double repo buy pattern. So we can see this drop down, closed above the 3x3, closed below, closed above again. So one thing that I do not like here is absence of the second spike of the double repo, second drop. That's why I probably would suggest that if market will take the reversal here, it will happen by some butterfly. I would suggest that market, any upward action will be triggered by some kind of the butterfly, and market, the double repo should form the bottom in the shape of the butterfly. So I will show you just to eliminate any questions from your side. For example, it could happen like this one. Very often double repo takes the shape of the butterfly. Yes, in this case we will get something of that I do not like with the double repos, but this very often happens on the double repo patterns on the intraday charts. So theoretically we already have got the second close, but this is not, guys, quite the double repo, because we do not have another bottom. So we have first bottom of the double repo, but we do not have second bottom. At the same time, market already has shown the second close about the 3x3. This sometimes happens. That's why I have got the experience that on the intraday chart, especially on the Forex market, double repo very often shifts and to some kind of the triple reports or something of that sort. When the market finally forms the second bottom and then close about 3x3 and double repo starts moves right from this moment. Anyway, guys, if even you will forget about this double repo, let's talk only on the butterfly. So it seems that if reversal will happen here, I mean on the bottom, on this head and shoulders, probably market should form some reversal pattern on the bottom of the right shoulder, right? This is logical. And here we could recognize currently only one pattern that could be formed. This is butterfly pattern. That's why if you're bullish, you probably could watch for, I don't know whether you will use this double repo, but you could watch for example, double repo buy pattern. Okay? If you will get it, you probably could try to take the long position if you believe that market will continue to move higher with this head and shoulders pattern. But what should do those of you who would like to take the short position? For that purpose, we will use the hourly chart. On the hourly chart, guys, we have nice area, 142.30 area. So what the area is it? First of all, this is, as you can see, weekly pivot point on the common week. Second, this will be confluence resistance on the hourly chart. Take a look at this, 142.30, 142.67. It's a bit wide, but still it's a confluence resistance. Second, guys, this is A, B, C, bottom, D completion point. And finally, this could be completion point for this minor bottom. Okay? So, if market will move to this area is strong enough to trigger some respect from the market in the shape of some minor bounce out from it. If even market will continue to move higher, this is just technical bounce. It very often happens from the strong level. That bounce should be enough for us to move our stop to the break-even. That's the major protection that I'm talking about. That's why, guys, we trying to take the positions on the strong levels, because they usually accompanied by technical bounces. And particularly this technical bounce is very valuable for us since they gives us opportunity to move our stops to the break-even and protect our position. Besides, if this will happen, that market will first move to this area, this simultaneously will erase this opportunity for this butterfly. And in this case, probably, I don't know definitely, but the chances on the reversal to the upside will be lower, because in this case, if market will first reach this area, we will need to search. Those of you who would like to trade on the long side needs to search for another pattern that could trigger an upward reversal. But if in the beginning of the week on Monday market will drop first and complete this butterfly, it's probably you should wait and see what will really happen. Because in this case, if even market will not turn finally and totally to the upside, some deeper retracement could happen here, and probably we will take position not from that level but from some higher levels. So use this scenario for entry only if on Monday market will start to the upside immediately. Only in this case. If market will form butterfly first, wait and see what really will happen. If you would like to trade on the long side, as I said, you could use this butterfly for the long entry, and if you believe in this candle pattern. But guys, really be extra careful, because this situation and price behavior on the daily, on the 4-hour time frame chart last week made me worry about the perspective of this pattern, and really makes me think that we might stand already in the continuation of the bear trend that right now stands on the weekly and the monthly chart. So current analysis, as you can see, a bit sophisticated, so lots of details, but I don't know how to say it simpler, since this all details are really important. So they are not just unnecessary details. So let's see what we will get in the beginning of the next week.